In today's video, we're going to be discussing which of these Yieldmax funds is the better value, Amazon, Facebook, or Google. If you stick around until the end of the video, I'll share with you which Yieldmax fund I'm doubling down on. So we earn over $100,000 per year in dividends at this channel, and my performance and value shows that I'm up 36% for the year. The Dow's up 3%, the S&P is up 13%, and the Nasdaq's up 27%. So we're beating all the indexes on a year-to-date basis. On a daily basis, we're up 1.33%. Yes, we're up $9,000, but I don't focus on the day's gains or losses. I just focus on percentages, okay? And as you can see, the indexes are up about 1%. The Nasdaq's up 1.06. So we're beating all the indexes on both a daily basis and on a year-to-date basis. If you need help living financially free out of your brokerage account, email me for my e-guides at akintodd48@gmail.com. I have e-guides on how to play Cornerstone here, which is my largest position. I have about 500 grand in Cornerstone. And I have e-guides on how to use margin to live financially free out of your brokerage account. For every $1 you put in your account, you get $4 of purchasing power. I just use a fraction of this purchasing power, this 800 grand that you see here approximately. It was $1 million recently. We were at 50% recently, by the way, but the market has pulled back some. And that's why we're making this video on Yieldmax funds, by the way, to see what's the better value as the market has pulled back. So here's my margin debt. It's $242,000, but this doesn't show up on a credit check. I can click sell at any time. This is low interest. It's only 6% interest. I negotiated it down twice. So for all these reasons and more, margin is my way of getting ahead. Okay, and also when I use this margin debt to get extra income and performance, the income shows up to banks and qualifies me for loans, okay? So that's how I got my car recently. If you watch my short videos, that's how I'm able to live financially free out of my brokerage account and qualify for loans even without a 9-to-5. It's because of these dividends. But I need to make sure I'm using the dividends safely, okay? That I'm using margin safely to get these dividends. So I put most of my account into Cornerstone to anchor it, and that's the safe play in my opinion, because Cornerstone is a 5-star fund, as you can see here on Morningstar. Okay, it's a 5-star fund, Cornerstone, and it beats the indexes, as you can see here. Cornerstone has a 21% dividend when it's dripped at NAV. See, you can see here, 21% dividend, but look at the market price. If you look at last price of $8, you can see down here below the drip I get here. The 21% dividend is dripped down at 663 each month. So 22% gain there, 652 the previous month, 24% gain, 642, 26% gain, and then 627, 29% gain. So the 21% dividend in Cornerstone is dripped down at the NAV every month for a reinvested amount that compounds your 21% dividend and grows your account. So we get days gains potential in Cornerstone. We're up 7,000 in Cornerstone today. We get the 21% dividend because we have it dripped at NAV, and we get those thousands of dollars of gains every month from the reinvestment process. Okay, you just have to learn how to ask for the special drip in Cornerstone, and you have to learn how to time Cornerstone around its rights offerings. Most closed-end funds have rights offerings every year that drops their stocks precipitously. Okay, so you need to get out before the rights offering and then buy back after to reset your yield. When the rights offering occurs in Cornerstone, I will send you the alert here on our Discord platform. Okay, we have many channels here on Discord. We have hundreds of members here. We have also a drip for Cornerstone section, okay, because not every broker offers the special drip for Cornerstone. So all of these members here can share with you their experiences on how they got their drips and their brokerage accounts going. We have an all things margin related section where people discuss how they negotiated their margin rates down. And yeah, because I negotiated my rates down twice, and many of my clients have had success doing the same. We have many other channels. We have a Yieldmax section. We have a trading section where my guy Carbon Zero puts out great information every day if you guys are into trading as well. We just have it all at the Discord chat room, and all of those services are free. All those channels are free when you buy my e-guides, okay? Also, when you buy my e-guides, you get my phone number to call me anytime at. I think this is an incredible value that other channels can't match. They also can't match the performance that I'm getting. So this is what I'm doing with my channel at my brokerage account, okay? I'm buying Cornerstone as my major investment, and then I'm sprinkling everything else around it, okay? I'm putting these Yieldmax funds around it. Now let's get into them without further ado. Let's go to the chart of Amazon first, okay? So we're going into AMZY, which is the fund that tracks Amazon, okay? So we need to go to Amazon's stock price, okay? AMZN. And you'll see here that it's on the 50-day moving average and is quite a value. So if we go to the chart of Amazon, you'll see that it's, first of all, it's off of its highs, okay? Amazon, it was formerly, if you can look on a 5-year chart, it was formerly at 180, okay? 180. We see this price up here, 175, 180-ish, and now we're only at looks like 133. So we're well off the highs in Amazon. And on a 1-year chart, we've pulled back to the 50-day moving average, that blue line. So that's an incredible buying opportunity, in my opinion, 50-day moving average. It's setting up for a good buy. And so I would have more money in Amazon right now, but I have a full position in it, okay? I have 10,000 in Amazon already. So let's go check out Google, okay? GOOY is the fund that we're watching for Google. That's the Yieldmax fund, GOOY. But Google, look at this chart. It also is bouncing off the 50-day moving average, that blue line. And Google is a value, in my opinion. Okay, look, it was at 150. Now it's at 130, kind of like Amazon. So I see incredible value in both Amazon and Google because the market's almost back at its highs. And so I'm looking for things that have not run back to the highs and also that I can put more money in safely without them burning me, whether you're using margin or not, okay? You need to understand the Yieldmax funds are very volatile and they also have high maintenance. So if you go to the maintenance requirement here of NVIDIA, let's say, let's go ahead and do Facebook because we're talking about Facebook, Amazon, and Google. So let's do FBY for Facebook. And I want to show you something. The snapshot, you see here, our margin maintenance requirement is 50% for Facebook, FBY, okay? So all these Yieldmax funds are similar. They're 50% in my brokerage account, okay? I don't know about your brokerage account. Some have them at 100%, okay? My brokerage account, it's at 50%. That means for every $100,000 you put into Yieldmax funds, 50,000 of your equity is taken up. And when this number gets to zero, this available withdrawal number, you're in a margin call. So I make sure to always have a nice cushion on for my available withdrawal. I can withstand over a 30% correction in the market because Cornerstone is our major fund here and it's 20% dividend, right? So if we have a 20% correction in the market, I break even because the 20% dividend in Cornerstone offsets the loss of 20% down in the market. So even when you're in margin, you can outperform because this margin debt that I'm using is also invested at 20%, or in this case, even higher in these Yieldmax funds. They're invested at 30, 40, 50, 60% dividends because Tesla and some of these others have exorbitant dividend yields. So I drip Cornerstone. I get this question a lot. I only drip Cornerstone for its distinct advantage at NAV. And then all the other funds that I have here, I just let them pay down my margin. Okay, at the end of 2 years, my margin debt will be gone and my account will be plus 660,000. So I'll go from 460 to 660 roughly, and my 242 will go to zero after my dividends pay back my margin. And then I'll be left with all these dividend producing assets to myself, paying me monthly cash flow for life. Monthly cash flow also qualifies you to banks for loans, which is how I level up my account so fast and get my car, my house. It's how I get business loans, personal loans. I live financially free out of my brokerage account from these dividends. You just have to be safe and be responsible. Only use a fraction of your margin. If you need help understanding maintenance, okay, and the power of maintenance and how it unlocks more equity out of your account, that's in my margin e-guide. So you can email me there at akintodd48@gmail.com. So we went through the charts of Amazon and Google, but let's go check out Facebook because this is the one I'm doubling down on, okay? I had 5,000 in Facebook this morning. I bought 3,000 at the open, so that cut my cost position in half from down 8 to down 4. And I want to get this position up to 10,000 because in the index, as you can see, Facebook is on, and QQQ, Facebook is about 4%, okay? There's Meta 4%, okay? Meta 4%. And in the S&P, if you look at the holdings here, you'll see Meta is 1.77%. So this means I can afford to increase my Yieldmax exposure and double down on FBY Meta because if I have 10,000 in FBY, do the math on that. A $500,000 account, 5,000 is only 1%. So I can get it up to 10,000 and it still be about in line with the S&P. And I could take it up to 20,000 and it'd be more in line with the NASDAQ. But we want our performance, I think, benchmarked between the S&P and the NASDAQ for optimal results. So for FBY, I'm going to get it up to 10,000. I'm going to buy another 2,500 today. I'm just waiting for, let's say, a dip in the market. I don't like to buy all at once. When you're using margin or when you're not using margin, you don't want to buy things all at once. You want to buy in positions. So I bought 5,000 FBY earlier. I'm down 8% on the cost position. Now, if we go to a chart of FBY, I'll show you why I'm doubling down, okay? Because it's well off its highs, okay? And it's not as good of a value play as the other funds that I just showed you, Amazon and Google, but I'm underinvested in Facebook. This is why I'm adding to it. Plus, it's off the all-time highs, okay? It's pulled back. And look at it on a one-year chart, you'll see that it's broke the 50, that blue line, but it's trying to find support around the 100-day moving average, that purple line. So to me, Facebook is somewhat of a value play. It's not the best value play compared to Amazon and Google, in my opinion, but I'm underinvested in the position, and it's a large part of the indexes, as I showed you, so I need to get this up. Plus, I'm just trying to get more income wherever I can. I need an excuse to raise income wherever I can, and since Facebook and these other Yieldmax funds are essentially FANG, then they're a large part of the indexes. They basically anchor the indexes themselves. So I'm anchoring my portfolio to Cornerstone, and then I'm anchoring the rest of these Yieldmax names to my portfolio by watching the allocations. Because if you put Yieldmax in your portfolio, you're getting more index exposure. You're anchoring your portfolio to the indexes once again. But be careful of the maintenance in these funds. They're 50% maintenance, and the allocations in the indexes. Okay, if you go all in Facebook or all in Tesla, then you're not going to be matching the indexes. You're going to be overweight. And you're going to skew your performance results, okay? So that's what we're doing, okay? We're talking about these three value plays, Amazon, Google, and Meta. And Meta, to me, is the fund that I'm doubling down in simply because it is off the highs, yes, but I'm also down in the cost position and I'm underinvested in it according to the percentages that you see in the indexes above. When I showed you these indexes, these are the allocations. I'm underinvested in them. So if you need help doing anything that I'm doing in my brokerage account, again, email me for my e-guides at akintodd48@gmail.com. When you buy all of my e-guides, you get free access to Discord, all the channels within Discord, and you get my phone number to call me anytime you need me, okay? I'll set you up in your account. I'll walk you through your account and set it up just like mine if you need me to. If you have any more questions, leave them in the comment section below. Please tell me what you think is the better value play out of these three Yieldmax funds. Click like or subscribe if you haven't already, please, and I'll talk to you soon. Thanks.